to me, I feel like there's a pretty good chance we'll be 150 to 250 on this cycle. And I think that'll probably occur between December and June of next year. And that at that point in time, everybody will be going crazy. You'll hear Bitcoin everywhere. You know, your shoe shine guy will be telling you about Bitcoin. All the Bitcoin players will be levered. You'll have all these Bitcoin treasury companies going nuts, right? And then just about then, everyone will be too far on one side of the boat. And we'll get a serious correction.
Lepard begins by highlighting a key advantage Bitcoin holds over traditional gold miners. There's no management team to mess things up. Unlike mining companies that can be poorly run, Bitcoin operates on decentralized consensus, and while developers can influence the network, no single group can permanently derail it. This built-in resilience is one reason why he believes Bitcoin will at times outperform both physical gold and gold mining stocks. Historically, Bitcoin has followed a 4-year halving cycle.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I do think Bitcoin will outperform gold. And I think at various points in time, it will outperform the gold miners, not all the time. And it does have one benefit versus the gold miners, and that is that there's really no management team to screw it up. I mean, there are these core developers who sometimes act as though they might screw it up, but fortunately everybody votes on it. So I think the votes are never going to get put into place to screw it up. So in terms of the cycle, Trey, I mean, there's been a 4-year cycle, and I think that might be getting a little bit elongated here. And my belief is that we're still in an upswing. There's some people who think we peaked at 120 something, 123, I think is the high. I don't think that's right. I think we've still got another leg to this cycle, and we're kind of consolidating right now. It's interesting to me that gold's moving first. I think my prediction for Bitcoin is we'll be at 140 at the end of the year. If you actually look at a Bitcoin chart, there's kind of a flag right around the 108 to 110 area. And if you project, how it went up to that, from where it went to there to the next move, it should go up another 30 or 40,000, put you at 140. And this cycle, what's the top on this cycle? I don't know. Maybe it'll get nutty up there and we'll squirt up to 200, but then probably we'll correct 50%. I mean, anybody investing in Bitcoin, the biggest risk I always tell people when they're looking at Bitcoin is you have to understand what this is. You have to understand how volatile it is. You have to understand that it's had 50% plus drawdowns. And so, and what'll be sad is we'll get to 150 or 200 even, and some people will finally say, they'll give up and they say, oh, God damn it, I can't take it. I'm going to buy some Bitcoin at 200. And just about then it'll go back down to 100. And then they'll say, oh, fuck, I bought it at the top. I'm an idiot. I should never have done that. And they'll blow it out at 100. That's the wrong move. I mean, buying it at 200 in a 5 to 10 year window is not a bad idea. Buying it at 200 in a 1-year window might be a bad idea. And so, I still feel like we're on the side of it where you can buy it today, comfortably knowing that even the next drawdown probably won't take you below where we are today. I think we're at 112 right now. I feel pretty comfortable that we won't go below that on the next drawdown, because I think the next upswing, and this is again looking at technical analysis, and there's something called the power law model. I mean, those of us who are in the space, we use about 5 or 6 different ways of triangulating in on the adoption of this thing. And so, and this is all just guesswork and based on past patterns. But to me, I feel like there's a pretty good chance we'll be 150 to 250 on this cycle. And I think that'll probably occur between December and June of next year. And that at that point in time, everybody will be going crazy. You'll hear Bitcoin everywhere. Your shoe shine guy will be telling you about Bitcoin. All the Bitcoin players will be levered. You'll have all these Bitcoin treasury companies going nuts, right? And then just about then, everyone will be too far on one side of the boat. And we'll get a serious correction. I mean, a lot of smart people, gold people who don't believe in Bitcoin say it can't be a store of value. It's too volatile. I get that. That's an argument. It's not unrealistic. I mean, a similar question. I like to compare it to Amazon. Was Amazon a store of value as it was growing, right? It was the leading online marketplace. Just kind of and obviously now it is the leading online marketplace. It would be very hard to displace, right? It's you kind of got a monopoly position at the top there. And so it stored a lot of value. In fact, it grew 220,000% in value. So that's the value of a growing network, right? But along the way, in 2008, it went down 90%. And Bill Miller
just going to bring that up. There were
Yeah.
3 drawdowns in
there have been multiple drawdowns of 50% plus.
And they were 50, 60, and 94 was the
exactly.
third one. Although
exactly.
that was a year and a half.
So I guess probably the right way to classify Bitcoin is, yes, it's emerging to have store of value properties, but right now it's kind of a growth stock. It's kind of an emerging network-based growth stock. That's probably, and so, if in the old world you held bonds for safety and stocks for aggressive growth, in the new world you hold gold for safety and Bitcoin for aggressive growth. The path is unclear. I mean, the technical analysis says we formed a bull flag at 3,500. As I mentioned earlier, flags fly at half mast. We should go up into the 4s. As you get further out, a lot of people have asked me, what's your ultimate goal, ultimate target? Where do these things go? And, in my book, actually, there's a chart that was done that shows that, to fully cover, the monetary base with gold, we'd have to have $90,000 an ounce gold. Now, you don't need full coverage to have.
When you say monetary base, you mean globally or the U.S.?
I mean USM2 is against what the 261.5 million ounces that we own. But you don't need full coverage to run a gold standard. You can run it on 20%. So, that would imply, I don't know, $20,000 an ounce gold to back the dollar with gold. I think what's very important for people to understand is it's all going to depend on the policy choices on a go-forward basis. I mean, what do we do? I mean, what makes this trade not work? And of course, I tell people this, they're thinking of getting my fund, is if the government suddenly gets responsible and balances the budget. And of course, they laugh hysterically because we know that so far there doesn't seem to be a lot of indication we're going in that direction. I mean, Doge came along, we're going to save 2 trillion, 1 trillion, 300 billion. Oops, maybe we'll save 100 if we're lucky. And then suddenly, the Freedom Caucus is out there saying, we're going to balance the budget. We're going to make these people cut expenses. Well, everyone except for Rand Paul and Thomas Massey caved. And, the big, beautiful bill is going to increase expenses by $300-400 billion a year. Now, that's offset by higher tariffs, which is a good thing. But the point is that the fiscal trajectory of the federal government's a mess, as you know. And as long as that continues, and as long as the Fed is forced into the policy role of monetizing that, which they are in right now, and so we just don't know where we're going to go. We don't know what Trump's going to do, although we do know from his behavior with respect to the Federal Reserve.
So what's the macro engine behind all this? Lepard is crystal clear: the sovereign debt crisis. The U.S. government's fiscal path, he argues, is unsustainable. Deficits are ballooning, expenses keep rising, and political leaders show no sign of reining in spending. Even when politicians promise cuts, the results are laughably small compared to the scale of the problem. As long as the government spends far more than it collects, the Federal Reserve will be forced to monetize the debt. That means more money creation, more inflationary pressure, and stronger tailwinds for real assets like Bitcoin, gold, and silver.
If you want to look at what's really moving right now, what I'm pretty excited about is silver, right? I mean, so silver at $41 is a big, big deal. I mean, taking out $35 was a big deal. I mean, this is a decades long, kind of cup and handle or cup and saucer and handle sort of pattern. And technicians and others will tell you that when you break out of one of these things, you got a long way to run. And so I guess if you ask me just, in the next few months where we're going, I mean, I am way bulled up on silver. I think we're going to 50, 60, 70, this year. I mean, certainly 50 or 60 this year. So that's the kind of the most notable and exciting thing that's happening. Obviously, I'm bulled up on gold and Bitcoin too. I mean, they're both going to move. There's been a pattern. I had a chart that I've shown some people on it in other pods about how gold and silver kind of tend to smell monetary debasement a little earlier sometimes than Bitcoin does, and they move first. And then, of course, Bitcoin suddenly starts to move, and it moves farther or faster. And so, it's a little more volatile, a little more subject to, kind of other things going on, risk assets and stuff. So I mean, in the long run, I'm incredibly bulled up on all of them, probably more, I think and I wrote the book, I'm probably most bulled up on Bitcoin, to be honest with you. I mean, it's very volatile with big drawdowns, but I also think there's a lot of upside. So But you know, if you're looking at kind of the balance of this year, I mean, I think we closed the year in silver at, you know, I don't know, 60 or 70, which is, you know, I mean, a lot from here. It's like 70 or 8%. I mean, gold, you know, 4,000, it's up another 20, 30% from here. And maybe Bitcoin 140, which is up another 20% from here. So, so you can see of the three of those, you know, I think silver's got the most excitement. And then I know we're going to get into this. You know, let's talk about the mining shares, right? So that's just the metal, you know. So if you're a silver miner and, you know, you've been making money at $36 or $38 silver and you've got X amount of profit, well, guess what happens when, you know, and your costs go up with inflation every year. That's happening. We all know that. Guess what happens when you take silver to 50? You know, your profit just went up, I mean, multiples of where it was before. And so that's coming. And these silver miners were cheap until recently. I mean, they have run a bit, but, you know, if people, a lot of people have asked me, oh, am I too late? You know, I mean, where are we in this whole thing? And I'm like, no, we're in the second or third inning of this share bull market, in my opinion. So there's I think there's a lot of upside, and I'm very bulled up on what's going on in the gold and silver shares. I guess it's probably based on technical analysis, and it's been suppressed for a very, very long time. And all the factors that all those of us in this trade have known for many, many years, I think are becoming more now, you know, you're seeing this shift so that everyone else is beginning to understand those factors. And what are a few of them? Well, one, the solar growth in China is just enormous. Chinese solar panels are now taking 30% of world production, and that's going to grow to 50 or 60% of world production. You've also got these new solid-state batteries that are being developed for EVs, not fully commercial yet, but going to be, we think, in the next few years. And they absorb an enormous amount of silver. And then, as you know, Andy Scheckman and all the others have shown us, we've been running these huge supply deficits. We've been, you know, we got grandma melting down her tea set to sell it to the local coin dealer. And, you know, it's just, there's been a chronic shortage of the stuff. And it's a small piece of the price of many of the things that it goes into. So if I mean, there's silver in your iPhone, not a lot, but there is some. And if that silver price goes up, you know, they could pass it along easily because it's a $1,200 phone. So the point is that there's just a lot of things that are finally kind of coming together. And I think, you know, guessing this, the 60 is a guess. Let me just say that. I don't know, right? But it's kind of finger in the wind technical analysis. Typically, when you do break through a support level, you tend to zoom pretty hard. And I think if you look carefully at a chart, you can see some flags and stuff. I mean, it's kind of like gold, you know. Gold kind of, you know, squirted up nicely from the 26,780 area to 3,500, built a really long bull flag at 3,500. It was kind of stuck there for the last many months. And, you know, now it's broken out of that. And so, you know, typical technical analysis says flags fly at half mast. Well, all right. So if it was at 27 and it went to 35, I mean, you know, that's $800. So add $800 onto 35 and you're at 4,003. I mean, I don't know if we'll get there, but I'm pretty comfortable we'll get to 4,000. And interestingly, I mean, the other thing I've really noticed a big change in. I mean, what's driving all this trade? I mean, as we know, what's driving all this is a broad knowledge of the sovereign debt crisis that we're in and how they're trapped and they can't get out. That's what's driving it. And so what are the evidence that everyone's getting it? Goldman Sachs, biggest bank in New York, says, you know, Vesmic says, we see gold at 4,000, maybe at 5,000 if the Fed loses credibility. Well, okay, that's pretty damn mainstream. And I got to tell you, a year or two ago, gold was at 2,600 and everyone's looking at the stocks and saying, yeah, but it's going back to 2,000. So the stocks are, you know, fairly valued. And I was like, no, it's not. It's going to 3,000 or 4,000. And of course, turns out I was right. They were wrong. And there's a catch up. And the stocks, and we can, if you like, we can show the chart, but the stocks have really lagged, you know, the metal, and we're in the process of closing that gap.
Lepard is not blind to risks. He says the one scenario that could derail his thesis would be if governments suddenly became fiscally responsible and balanced their budgets. But he quickly adds that almost nobody believes that outcome is realistic. Political incentives simply don't line up with fiscal discipline. Thus, barring a massive shift in policy, the long-term direction remains clear: more debt, more money printing, and higher prices for scarce, hard assets.